All right, we're going to talk about forward-looking financial projections. In my opinion, these forward-looking financial projections are the most underrated and underutilized financial tool. This much I know. This is without a doubt. If you have a vision for your company to grow, you want to scale, maybe at some point you want to exit by selling, you need to get financial projections in place today, right? You have to start today, and here's why. Financial projections are the forward-looking tool that can connect your vision that you currently have. It's up here, right? You have that vision for your future, but you need to connect it to a financial blueprint that will make it a reality. And this is the tool for scenario planning and course correction. You don't need to be 100% accurate when you're doing a financial projection, but it should be directionally useful. 80% is good. It'll get you there. Now, the financial projection is not a cash flow forecast. We've talked about that before, 13-week, week over week. How can I make payroll next week? What are those short-term obligations? When we talk financial projection, we're talking long-term financial planning. The goal with a financial projection is to think long-term, maybe month over month, not week over week. And you want to look out 1, 3, maybe 5 years to make sure your targets are aligned with your operation and your financial capacity. Done correctly, this tool will help you answer the big questions of your business life. Does any of this sound familiar? You're a business owner, entrepreneur, and you've asked yourself, maybe internally, maybe you've asked your leadership team, but maybe you've asked a question like this: how does my strategic plan impact my profitability or my EBITDA? Maybe a business owner or a business broker or somebody at the bar told you, listen, you have a 6 multiple in your EBITDA in this market, but you honestly have no idea how to really track that. Be honest. Or maybe you've asked yourself this question: what gross profit do I need to hit for my expansion plans? Do I need to double my revenue? Well, and if I do that, it probably comes with additional hiring, more overhead, but I need that to manage more projects. I'm not sure really what all that costs. Or maybe you've said something like this: I want to establish another crew, but I know I need another project manager if I do that. How much cash do I need to have on hand for maybe a 3-month runway? Because let's face it, that crew is not going to be fully utilized on day one, and I probably need to have a training plan in place. And again, all of these costs are associated with that decision. Or maybe you've thought, I'm thinking about this acquisition, but the bank says something about sources and uses, and I heard Jim on Instagram and he said SBA loans are great, but now all of a sudden the bank's telling me I got to come up with 10 or 20% cash contribution and make this financing work. How the heck do I plan for that? And this may be the best one. I hear this all the time. It's November, maybe it's December. You met with your CPA and he's telling you, hey, it's been a great year. You're profitable. You got some cash. You got to ditch it. You got to ditch the cash so you can lower your tax liability. You're hearing him and you agree, but at the same time, it's making you nervous because, well, Q1's not looking great of the following year, and that might put me in a bit of a cash crunch. Should I take that risk? Should I go get financing instead for that equipment or that truck or that expansion? I just don't know. My former boss and mentor, Sam Thevenaigo, CEO of Parts Life and D-Val, he would always tell me, Jim, the love language of business is money, right? There's no other way around it. If we can't talk in dollars and cents, then we're really not ready to have a conversation. And the truth is, financial projections need to answer all those questions. When you're collaborating with your team, your CFO, maybe you have a VP or a leadership team, whoever's part of that, you should be able to have a fluid conversation that's dynamic. It should include all of these what-if scenarios. It should paint a best case, worst case scenario to help you formulate your decision, so it's data driven. Again, we're not trying to get rid of your intuition, but we want to supplement it. We want to build around it so you can make the best decision possible. Get rid of your static budgets. Your business, as a small business in a small to medium-sized market, it changes too fast. The external factors change too fast. A static budget is absolutely useless unless there's an external stakeholder requiring a one-time static budget, maybe a bank, maybe a lender, something like that, maybe a bonding company, but you don't need it on a day-to-day. What you do need is a rolling financial projection that's dynamic and that gives you the ability to constantly update it to make better business decisions.